Hello friends, welcome back to yet another video. Today this will be a unique video. I have seen many people who try to trade financial markets are always seeking for a strategy that is a holy grail. A strategy which will improve their financial trading of the markets, which will improve their profitability, which will never give losing results, which is completely not true. This is false. When you are going to trade any instrument in financial market, it is bound to give some whipsaws, it is bound to give some losses, and certainly it will give some profits as well. So today I'll try to break down my entire knowledge about indicators, that how the indicators should be used. You see, there are lot many types of indicators. There are some momentum indicators, there are some oscillators, you see, there are some volume based indicators which rely on certain aspects of volume to show that how much quantity or volume of participants were active at a particular price level or a time level. But today we'll be focusing on some momentum indicators to make some quick bucks and how to use them properly. Now, the first thing I want to discuss is, we have always listened this phrase that all the indicators are lagging. That all the if you simply plot a moving average, simple or EMA, it does not make any difference. If you plot a moving average, you will listen the first thing, that moving average is something which is very lagging in nature. When the price movement will be over, then this crossover will happen, right? Now, when the crossover will happen, the question arises, when two moving averages do a crossover. Why do they form a crossover? They form a crossover. Suppose that you are having two types of MA. One is a slow one, one is a little fast one. For example, in this scenario, I will be using 8 and 21. I have plotted few indicators. I will be going through them. This is a EMA cross indicator which is freely available on TradingView. You can plot. I have plotted 8, 21, 50, and 200. The reason behind using this simple single indicator is because you won't be able to use if multiple indicators on a free version. So this will be covering your uh, free EMA for 4 durations, which is very much okay. Now, if you see what this indicator is doing, it is giving you a crossover of 8 EMA over 21 EMA, and the other two moving averages below are 50 and 200 moving average. This is simple chart of Nifty. So the another question which comes in mind is, when do we make money in markets? There are certain phases in which markets are mostly stagnant, or any instrument which you want to trade is just in congestion or just consolidating. It is not having any momentum. It is not having any momentum either side. You see? So the phases which are having momentum and the price is moving, that will be the phases which are the most easy to make money. The prices should be trending in any direction. If they are just doing consolidation, whipsawing this side, that side, you see, then you will be getting hit, stop loss hits, which will be not profitable. So the first thing we need to find out, that which are the stocks which are really moving. The first criteria for that is, the stock should be above. For example, if you see this Nifty chart over a long period of time, this should be above 50 and 200 moving average. It means some of the market participants think that this particular stock is having some gravity, and some money should be put into this particular instrument. Once a stock has moved below 250 moving average, there is some negativity about the instrument which you are just watching on the chart. That is not the ideal candidate to trade your money in. So filter out the stocks. First criteria, filter out the stocks which are moving It's a simple one. Moving our moving above 50 and 200, both moving averages. The next two moving averages, as I told you, will be 8 and 21. Why 8 and 21? Because through various, you know, a random back testing, I found that trading on a daily time frame 8 and 21 gives very good result. You can even do anything, and you can take 3 and 6 moving average, crossover of 3 moving average and 6 moving average. Later you can put a 18 or 20 moving average. The criteria will be simple. The stock should be moving above 18 moving average or 20 moving average, and there should be a crossover of 3 and 16. Now, if I say a crossover, you see, it will imply that the price is trying to go into some direction. That's why it is having some momentum. It is, or that it is gathering some momentum, and it want to go up. For example, slow moving average is moving faster, so it crossed above the other moving average, which is somewhat slower. In this case, which is 21. So you see, if I zoom this particular chart, I have marked crossovers as this plus sign, black plus sign. So many people will be saying cross EMA crossovers are not reliable, they are lagging in nature. Yes, that is fine, because any indicator which is formed on the basis of price, which is considering price in that calculation, will always be forming once the price has done its part. That is perfectly fine. But once a crossover or some other buy signal has happened, it means that price is moving. That is true. Yet there shouldn't be any confusion. If there is a crossover, or if there is a super trend buy, or some other indicator is giving a buy signal, that means there is some movement happening. It might be lagging, but there is some movement which is happening. That's why it is giving a buy signal. Now, how do we use this to our advantage? If there is a buy signal given or a crossover given, we do not enter on on that particular crossover. Instead, we want to make sure that the signal which has been provided by the indicator is real. Now, how do we see that? Try to increase the probability of finding a genuine signal. If the signal is genuine, right, and the momentum indicator is lagging means it is surely going to give some pullback. That's why we call an indicator lagging. Getting my point? Just try to understand this logic. This is the basis of every strategy you will ever make. Every profitable strategy is based on this logic. You can make this into your favor. If there is a crossover happening or a signal has been generated, you do not enter on the signal itself. You wait for the pullback. Now, if that signal is unique or it is genuine for that matter, it will surely take out that high which was found before pullback. You see it here now. For example, this crossover was given here. Since this momentum already happened, we are still waiting that we need to confirm if this signal is genuine or not. We simply wait. Do not enter into any trade. Mark this high. If this signal is really genuine, then this high will surely be taken out. Getting my point? This signal will only be genuine if there is really some momentum into the price. If it is fake, it will do this and again turn back like this. That means this was a whipsaw signal, it was not a genuine signal. Just try to understand this. You can make a strategy with any indicator. I bet if you understand this logic. So, this lagging indicator is to be used in our favor just by understanding the logic behind what exactly the lagging means. Lagging means momentum already occurred, we are late into the signal. It's okay. Wait there. Now we need to find that signal is genuine or not. If there is a high made after the signal has been given. And if the signal is genuine, it will surely cross that high. You enter here. Sorry, not this one. You enter here. Now, many people will be saying, "Oh, it is too late. It is too late. Why don't we enter here only?" So, what is our motto from this trading? Profit making. If you enter here and make a loss, and if you enter here and make a profit, does that make sense? You only want to make profit. From this point, if you are able to make 10% or two or three times of your current stop loss, is there any harm? No. So just try to understand. It is not related to the point of buying which makes profit. It is related to absolute value of how much you are getting with respect to your stop loss. If you buy here, for example, if you buy here and do not check the genuinity of this particular signal, and in case it trips back, hits your stop loss, then there is no point buying at this point. And in case you are able to generate profit here, which is somewhat above, suppose the stock is trading at 90 rupees, you want to enter very exactly when the signal has happened, it is at 90 rupees, but you have not confirmed it is genuine or not. Put your stop loss at 85, it rotates back and hits your stop loss again. Without buying at 90 rupees, you wait for the stock, it moves till 90 without doing any hiccups. You just patiently try to breathe in, breathe out. Nothing, just focus. Whenever the first pullback happens after the signal and that high of that pullback is taken out, you enter at 100 rupees. Put the stop loss as 90. Once you get 2x, 3x, get out of the trade. Did you make profit? So now tell me, buying at 90 was beneficial or buying at 100 was beneficial? It does not make sense. At what rupees you buy? It only makes sense you make profit whenever you buy. Nothing is too high, nothing is too low. Forget this criteria. Only buy when odds are in your favor. How do we judge that? Simple. The momentum should be getting higher. There should be some genuine signal there. Once the high of that signal after the pullback has been taken out, enter it. Now I will show you some examples. I hope you guys are getting the point. I might not be that good in explaining these things, but I will try my best. Now we will take some other indicator which is very famous. Super trend. It's a simple super trend. It is a free indicator on TradingView. You can use that. Now I will not use the Nifty chart. Instead, I will be using some other. This is BSC small cap stocks. You can use these stocks, no problem. I will suggest to use these stocks, small cap stocks. The momentum is always high. You will be making quick bucks in very recent time, very less time. Now, you see this particular chart. What is it doing? It has given a buy signal here, correct? It has given a buy signal here. Do you enter here? No, you do not enter here. Then where do I enter? Right question. You enter and wait till a pullback is formed. Pullback is formed here. Pullback should be at least 2 bar, more than 2 bars. 2 bar or more than 2 bars. This is the point which I just want to highlight it. 2 bar. Do not enter on a single bar. Mostly it will not be that beneficial, but you can try entering on a, what is that called, inside bar. So you see, signal has been formed here on that path. This is a, let me zoom this out. Okay, where is that? On this candle you have got a signal. Do you enter here? No, you do not enter here on this signal. Wait for a pullback. Pullback means this inside bar will be counting. No problem. Buy here. You buy here above this blue line. Where do you put the stop loss? Put the stop loss over here. The swing low which has been formed subsequently, which is this. Now where do you get out? Get out is very arbitrary thing. Put your hard stop loss somewhere around 5%. Right? Now the another thing which will be counting very much in this strategy is how much or how do you calculate the position sizing. It is very very simple. Suppose you are having 1 lakh rupees total and you want to risk only 1%. 1% of 1 lakh is 1000 rupees. Perfect. Now you will be buying the stocks which has stop loss of 5%. Now 5% of 20,000 rupees will be equal to 1000. You can calculate like that. I won't be teaching teaching math here, but your stop loss is coming 5%, maximum 5%. Don't go for 8, 9, 10%. Maximum 5% is stop loss. And so how much money will you be putting here? 5% of x is equal to 1000. 1000 is your max loss, which is your total capital's 1%. Right? Now what will be the x value? When you calculate, you will be getting 20,000. If you are having 1 lakh rupees, go for 4 stocks or 5 stocks maximum and put the money which is equal to 20,000. Once this stock moves 1x or 2x, put it to break even. When it moves 10%, 12%, get out. That's it. You bought on this candle 1, 2, 3, 4. 10, 12% on this candle, get out. Do not wait for doubling it. No point. In 3 or 4 candles, you are able to make 10% out of your investment. Now, which bank FD will be giving this much of return? None. Which RD or which instrument will be giving the return of this kind? 3, 4 days and 10%? No. None. Zero. Try to understand the logic. Now, this is the momentum strategy. You never want to consider if I am buying at 80 or 90 or 100. Forget the buying price. Just target the risk reward. You make 2x or 2R, put to break even, right? Put to break even. You make 10, 12%, get out. Profitable trading. That's it. In case you want to just carry out full fledged, that I want to see how much it is going. Just keep trailing behind every stop loss, every swing low which is being found subsequently. Here, you put your stop loss once this is breached. Stop loss here. Then again, stop loss here. Then again, stop loss here. Then again, stop loss here. Right? After that, it will be just going against you here. You will be stopped out here at 260. Your buy will be somewhere around, where has that gone, man? Here. Your buy will be here, which is roughly 215. You see? So this is the strategy. This is I have shown you using some EMA crosses. You can use RSI, you can use super trend, anything which you want. That should be a momentum indicator. You just understand the logic, and I'm telling you, you will be certainly profitable if you are not so. There will be many holy grails, many strategies which will be taught over the internet. They will be saying it is a sure shot strategy. Mind it, nothing is sure shot. You will never get anything which is sure shot. If it was sure shot, everybody sitting on a pawn shop will be making this money. Everybody doing some rounds over some choraha will be making money. That is not possible. It is a business. You need to understand when you make an investment, when you risk that investment, then only you will be making money. But your risking of investment should be very logical. Risking everything into one trade, that is stupidity. You see? Let's see some other cases as well. We will be only going for buys. If you want to go for selling side as well, you will be researching or diving into the FNO stock. I have not included FNO stocks. It is simple small cap stocks. You see. Now you see here the losing trades. Buy has been given here. You put a 5%, 5% stop loss somewhere around here. See, it is very volatile. 5% is very less. Okay, 5% is stop loss. It broke around here. It went to 10, 12%. You got out, right? Another sell trade. You don't want to take sell trade. Now buy signal given again. You buy when this high is taken out. Put somewhere around 5%. 5% is stop loss. Or if you want to just take entire swing as the stop loss, reduce further position sizing. Just calculate as the formula given. When you move the 2x, 2r, put to break even. When you move 10, 12%, get out. Simple as that. Now here, you see, buy here. I think it is not going above, but it's going above this here, and you will be simply getting into stop loss. No problem. 5% stop loss, it's okay. We are not losing our house. Again, when the signals are reversed, forget that trade. Skip that trade. For example, here, a buy signal given here. Now we don't enter at the buy signal. We are waiting for a pullback and we will be buying over the high made before pullback, which is this. Did it go up above this? No, we don't buy here. Now, sell signal, we don't take it because it's not a FNO stock. But I have just chosen a random stock. It is all random. I have never prepared anything to show strategy that my strategy will be working like this. It is a trading 618 momentum strategy, and I bet if you follow this religiously, you will be getting it profitable. You just see for another example. Here, buy signal given, we do not enter here. Many people will be just entering here, just seeing that it has given a buy crossover. No, we will be buying above this. Entry here. Stop loss 5%. Sorry, what is this? This. Entry here. Put somewhere around 5% stop loss. Moving to 10, 12%. Wait. This is 5% stop loss. It moves to 10%, which is 2x of your stop loss, which is here. You put it to break even. It came here. You put it to break even. You put your stop loss break even here. 2 3 rupees above to cover your expenses of trading. Now you trail here. This low being formed, right? You keep on trailing for every swing low which is formed. What happened? You see, put your stop loss here, then again here, right? Now once it moves 10%, get out. Once it moves 10%, 12%, get out. You don't want to double that stock or double your investment in a single trade. In case you want to enjoy the trailing, then you can keep trailing behind every swing low which is being formed. Now, sell signal given. No need to bother. Forget this. Now, buy signal given here. Buy signal given here. Do we enter at this stage? No, we don't. We do not enter here. We wait for the stock to form high and subsequently go into a small pullback. Where do we buy? Put the stop loss 5%, buy above here. This is very recent activity. It is not something which has been framed just to show into the video. No, nothing. I have not even thought of um, showing these videos. I mean, showing these order of stocks. No need to. What I know, it is to be shared in the raw form. I'm not making anything. 5% stop loss. In one candle, you got 12%. Get out. Just get out. Simple as that. Now, there is one more scenario. Suppose that you want to trade into a single stock. right? Then how do we re-enter? Re-enter on the next high. Simple as that. For example, you got 10%, 12% here. You want to re-enter. Buy above here. Put your stop loss here. Put your stop loss here. Buy again. Your entry will be here. Stop loss of 5%. Once it moves 5, 10, 12%. Get out. It does not move 7%. 10% will be coming here. Okay. On Friday, you got the target 10% plus. Get out. That's simple as that. Simple as that. Let me remove these drawings. Okay. Let's move to some other stock just to show these scenarios. This stock is just moving down, which will surely be below 200 moving average. Filter the stocks which are at least above 200 moving average, which will show that there is some interest by the market participants to invest money in that, right? Hmm. Okay. VLS Finance. Do you know what does this stock or company do? No, I don't know. I never heard this stock. But how do you do into that? How do you trade? Buy signal here. Buy signal here, and if you put the stop loss here, watching this inside bar, then I think this will be a losing trade. No problem. It's okay. It will be a losing trade. How do we re-enter? Re-enter on the high, next high which is formed. Correct. Next high is this. Just the other candle. Entry will be on 10th of January. Put the stop loss 5%. Whenever it moves 10, 12, 15%, get out. Whenever it moves 10%, first thing, move the stop loss to break even plus 1 to 2 rupees to cover the brokerage charges. 10, 12, 15%, get out. That's it. Simple as that. Hmm. The other one. This is Globus Spirits. It has given a buy signal on Friday. Do we enter here? No, we do not enter here. We just wait patiently. What is the next course of action? Let it do its thing. Let it give a pullback like this. If this signal is really genuine, that really the money has been put into this stock by some big guys, then it will surely do this. Where do you buy? Buy here. Put the stop loss over the swing low or most 5%. It moves 2R, put 2 break even. It moves 10-15% in 2-3 days, get out. What else do you want, man? Get out. Now, this is the strategy. This is the strategy behind every trading strategy which is profitable. Nobody will tell you this. They will only tell you do this, this crossover, you buy it. You, that moving average, 120 moving average. That is very good. 50 crosses 100 or 100 crosses over 200. 50 crosses over golden ratio. They will be giving, yeah, buy there. But that is not true. You keep buying, you will get stop losses. Now, will it make every profitable trade? No, that is not even possible. Never think of it. If it makes 50-60% of profitable trades, you got a holy grail. The definition of holy grail needs to be changed. Understand that. If you are getting a strategy which is 60-70% giving profitability with more than 2 hour, 3 hour, then you got the holy grail. You don't need anything to make money in markets. So it is getting lengthier. So I'll be stopping this recording now. It is, I think everything has been explained already. In case you are having any query or confusion, do not forget to post in the comment section. Please like the video, share it with your friends so that it is getting the maximum attention. Alright guys, if you have any query, do not forget to post in the comment section. Thank you very much.